Hey everyone, and welcome to the Everyday Investor Podcast today. I trust that you've had a rewarding week. I took a breather last Friday, offering myself a retreat at a holiday home with my sick child. She just got some sort of horrible sickness, a cold of some sort. So I did the heroic self-sacrifice, jumping on a grenade type of thing, and took her get her away from the rest of the family, keep them healthy. That was the idea anyway, and that was the story for the wife. Of course, I got sick as a result. And for my 6-year-old, though, I'd love to think she had the time of her life, of course. But the reason why I'm telling you this story is that I love the drive up. Usually, when the kids are asleep or I bring my noise-canceling headphones, getting there is half the fun. Over 2 hours of driving leaves plenty of space for Bloomberg and Bigfoot podcasts, followed by Paul Simon, Emerson, Lake, and Palmer, perhaps a couple of TED Talks. But driving about 30 minutes out of the city or so, the work brain just turns off, and I can see things a bit clearer. Idea lactation kicks in. This is my version of creative problem solving. You start solving little problems, you get the bigger ones to solve, and for me, the best way to solve them is by being on the road, listening to non-related educational content and 70s folk and prog rock. That's pretty much my thing. I think of it, though, as my forge, or that space right in between these two states, the problem state and the solution state. You'll have a forge too, no doubt. It'll be your own thing. We all have this. It's just like a mental state of being somewhat in between being creative and being strategic. And I think of the entrepreneur like this. They birth solutions to problems that resonate with others, which in turn drives desire to create something better. And in the process, they create wealth, they unlock value. And why that's relevant is that right now, there's a lot of problems out there, often in our own worlds, yes, but definitely in the wider world too. And this is why I think we should be genuinely really excited about the state of the world right now, which sounds terrible to say that, but it's good news for those that are, I guess, trying to get ahead, if I can say it like that, or trying to build wealth. Dumbing down the noise, though, that's the hardest part. We kind of have to do that to see some of these solutions. Now, before you go on, some of you are going to love this episode, but others may feel a little bit jargoned out. So, for those without much exposure to the term Web3, allow me to introduce you to a better explanation.
The term Web3 typically refers to visions of a future phase of the Internet, which is based on decentralized networks and powered by blockchain and other distributed ledger technologies. In this envisioned model, users have much more direct control over their own data and interactions, as opposed to the largely centralized control seen in today's Web 2. The decentralization of the Internet can have significant implications for user privacy, data ownership, and overall online experience.
Okay, so hopefully that helped. Now today, advanced technologies such as AI and blockchain are being woven into the fabric of the finance sector. And that just seems like it's a money thing, right? Or people that are finance geeks, they care about that. And I guess this would be typical to anybody who is passionate about their little thing, but I don't think this is just about innovation within the finance space. Yeah, there's plenty of that going on in the Web3 world, but I think it's more about transformation. In fact, I'd be happy to suggest that when we alter the very currency of our lives, like what we seem to be doing in multiple ways right now, we reshape the contours of our world. It has the power to change our world. It's kind of like a variation on fix the money, fix the world. If we change the money, we are going to change the world too. We might not know what that looks like though. From the creation of the U.S. Federal Reserve in 1913, a very significant event, to the global financial crisis just over 100 years later, I think we might be witnessing the greatest transformation to the way that money moves around ever. Just right now in this period of time that we're currently in the middle of. And today's podcast is kind of an example of that, which is going on right now. Again, an example of bridge building, I guess you could say, from the already to the not yet. So Jerome Faury, CEO of Immersive, he's going to be talking about his insights around the evolution of finance and how, with their relationship with MasterCard, those who are using or can use a Web3 enabled wallet can now transact everywhere that MasterCard is accepted, which is pretty cool. Now, to me, it sounds like Immersive is one of the first of a new wave of the crypto bridges between our current financial system with all its constraints and the versatile, omnipresent potential of DeFi or decentralized finance. I hope you enjoy the show as much as I did. Let's get started. You're listening into the Everyday Investor Podcast. Passive investing, property investment, managed funds, and crypto. If you're an everyday person wanting to build new wealth for the new world that you're heading into, then this podcast is for you. I'm Darcy Ungaro, your host. I'm a qualified financial advisor, but I'm still learning how to invest better and teach others how to do the same. I talk with guests and cover a range of topics designed to get you to think for yourself here. But please keep in mind, this can't be considered financial advice. Be sure to do your own research here and seek qualified advice of your own before making investment decisions. If you want more information, check out the show notes in your podcast player and make sure that you've subscribed to YouTube also. Then follow the Everyday Investor on all social media channels. The NZ Everyday Investor Podcast receives support from the following partners: Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand; Gorilla Technology, increasing business success through innovative and strategic IT solutions; Ungaro & Co. Financial Advice for everyday people building everyday wealth. Hope you enjoy the show. Let's get started. Jerome Faury. How are you, Jerome?
I'm really good, thanks, Darcy.
Fantastic. You are the CEO of Immersive, so we probably will talk a little bit more about Immersive as we go on through the show, but can you just tell us in a nutshell, what is Immersive? What do you guys do?
So we're a fintech, paytech company, and what we do is the world's first solution that bridges Web3 applications with the MasterCard network. That means that people can spend their crypto directly from their Web3 wallet anywhere MasterCard's accepted, without trusting a bank, a centralized entity, or even Immersive itself.
Okay, so that sounds like there's probably a lot of moving parts that you guys would have put some time in. I know you're a team of 30 people and you've raised 17 million in a seed round, which is phenomenal, off a back of 120 million valuation. So you guys are going places here. It's really cool to see that coming out of New Zealand as well. I'm just going to pick your brains as much as I possibly can. And the best thing that maybe I could start with is this really cool thing that I read, which came from a document you wrote. So I'm pretty sure you didn't make up the stat, but in 2023, we're living in a world where 62 people control half of the world's wealth. So 62 people control half the world's wealth. How does decentralized finance and Web3 technologies play a role in fostering a fair distribution of all that wealth, if it does at all?
Yeah, good question. So as you know, the world's most valuable asset right now is data, and probably more specifically, trusted data. And with decentralized networks, what happens is you're able to distribute the data and therefore distribute the value. And instead of centralized entities having a control over that data and the digital identities that are linked to that data, and obviously those shareholders and founders of those big tech companies, the Apples, Googles, Metas of the world, individuals are in control of their digital identity and access to their data, and therefore it flips the model on its head essentially, where instead of a centralized entity extracting value from individuals who ultimately become their product, then we can also participate in the value chain as participants in these new economic models.
Is that too idealistic to suggest that these companies that control, 80% of the world's most valuable asset, which is trusted data, is it too idealistic to expect that they will relinquish any degree of control?
I don't think so. I think big tech is a significant threat to both governments and also to more established entities such as banks. And I'll give you a good example. So 2 weeks ago, Apple launched a new savings product, something that typically only banks would provide to consumers. And within 4 days, they were able to onboard 250,000 new customers and receive over 1 billion in deposits. Now, that's a significant threat to the establishment, mainly banks. But it's also a threat to governments when you look at things such as sovereignty around digital identity. I suspect more people in New Zealand have a Apple ID than they do a Realme account. We need money that works on the internet. It's just a given. But the pace at which governments are moving is far too slow. And the engagement and relationship and the relevance that big tech have with consumers today is a real threat for governments where it comes to digital currency and digital payments. And so I think between governments and the more established traditional players, and obviously the fintechs and the decentralized movement, there's enough parties that act as a counterweight to big tech, albeit I do agree it's a big task. And, sometimes what's ideologically correct isn't practically possible.
I guess there's three groups, isn't there? There's government, big tech, big population in the world. Ironically, it's upside down, and those that are more numerous seem to have the least amount of power, right? Least amount of influence. And from a government's perspective, would it be true then to say that maybe the enemy of my enemy is my friend? In other words, maybe partnering and serving the people better is actually their best strategy. Is that the game theory?
I think so. I mean, in the context of the banks, I think, if you want to have impact and almost anything, you need to have kind of speed and scale these days, particularly in the tech world. And so I think fintechs, or tech fins, probably a better description, they're allies for the banks. The banks bring scale and distribution, and the tech fins bring innovation and speed. And together, I think we have a chance of combating big tech coming in and playing a role in domestic, financial services and payments. If you look at the data relating to digital currencies, you'll generally see that groups that typically have had a distrust of governments and centralized entities, generally minorities, are typically higher holders as a percentage, on a per population basis of digital assets than people that are probably already doing all right under the existing system.
I think it was last year that this stat came from. $7.2 trillion were settled last year on USDC, a stablecoin, and that's quite a bit. And I think I read somewhere, maybe again it was probably one of your articles, that was it like 2 point something trillion was the volume settled on the MasterCard network. So significantly, massive amount going through stablecoins, and probably a lot of us aren't even really that familiar with what stablecoins are, but I come across people all the time that are actually using it within their business to pay people overseas. It's just faster, it's just better, and people are using it. Do you think this is the way, just to start using alternative forms of currency, and just regulators and governments and banks, they'll just adapt?
Yeah, look, I think, it was about 3.2 trillion settled by MasterCard, and I think that 7.2 trillion, since I've sort of talked about that, I've found out that there's probably a few bots involved in that number. So maybe it's not a apples for apples comparison. So I need to do a little bit more DD on that. But definitely the best way to do something is to try. I give this analogy quite often, where I last year tried to buy some crypto, and someone at the bank declined. Well, the bank system declined my transaction. I had to have a call with one of the call center people who wanted to explain to me the risks of crypto. And this person, talking to me, I obviously understand a bit more about crypto than most people working in the call center at a bank. It's a bit like a 12-year-old kid who's watched a YouTube video trying to explain to me, who's driven for 30 years and driven manual cars, how to do a hill start in a manual car. You can watch all the YouTube videos you want, but until you get in the car and you're feathering the clutch with the accelerator, with someone behind you, with the handbrake, and you have all those emotions going, you don't actually know what it's like. One of the things that really interests me at the moment is I recently have done a bit of work with ACAMs, which are kind of the body responsible for certifying professionals around AML and compliance and CFT, countering financial terrorism kind of acts. And in New Zealand, we spend $100 on countering anti-money laundering, financial crime, to save $1. But these digital currencies, once you digitize your either a stable coin or a fiat currency, central bank digital currency then you can make it smart. You can program it so that only two parties that have been KYC'd can transact with each other over, say, $10,000 or $1,000 or whatever the rules are. And only transactions where the source of funds, I know where this money came from, can also be transacted. So you can actually codify compliance into it. So where we probably spend hundreds of millions in countering financial crime. And I suspect there's not that much that goes on in New Zealand to justify that. The network and the stable coin or the digital currency itself can be programmed to deal with all of that. It wouldn't be hard once you've got this open, transparent ledger where all transactions can be seen by appropriate parties, because obviously individuals don't want other individuals to see their transactions. You can have privacy and transparency at the same time. Things become a lot more efficient, a lot more elegant. You could even do things such as program GST into it. If a company goes out of business, often it's the IRD that's missing out on its GST money. But if the GST was taken at the point of purchase, then that wouldn't be a risk anymore. So there's a whole bunch of really cool innovation that we can bring to market, and particularly for New Zealand, which was the first country to float its currency openly. And these days, 2.1% of all foreign exchange transactions in New Zealand dollar transactions, one of the 10th most traded currencies in the world. For us to remain relevant and competitive in this global landscape, we need to evolve our money supply and clearly make it digital, because in the future, that is the only way that value will be transferred. I can almost guarantee it.
And I guess the example that you discussed before around AML, and we're spending $100 basically to save $1 just by doing that, is probably, I don't know, maybe just one of the many workarounds, patches, duct tapes, revisions that have to occur over time to make sure that the old system still works. And it almost feels like there's a pair of hands just hanging on desperately to the status quo, reluctantly allowing this innovation to seep through. Am I pushing it too far to suggest that this comes from pretty high up and it's on purpose? Or is this just a function of outdated business models that are still running so that it can eke out a rate of return for the shareholders?
Yeah, well, look, in New Zealand, the return on equity for banks is, over 13%. And typically the highest globally is around half of that amount. So the New Zealand banks are doing pretty well. The $5 billion in profits that they make, I think is fine, actually. I don't mind that, because New Zealand banks, or the Australian and New Zealand banks, they hire people in rural New Zealand, they're reasonably stable, they're good actors and all the rest of it. But what they're not doing is reinvesting in innovation, in digital currency, in digital payments, and digital identity. Like, it's very hard for me to go from one bank to another to share my data, and the KYC process is problematic. I tried to buy a house a couple of months ago, and I had to do a deposit, and the transaction was declined. And the reason for that is I didn't have up-to-date KYC credentials. I was like, well, can we do something online? I'm actually traveling at the moment, and I'm trying to... So they declined my transaction, even though they know who I am. I'd even done the KYC process recently, but they couldn't find the record of that. And so I think there's this massive moat. And I think also, like, the open banking stuff, 5 years on, and basically no one's using it. And why would you? You need $300,000 worth of insurance to be able to use it. It's got less functionality than the direct debit system. So as an example, you can't do refunds via it. The banks are generally, apart from what Reserve Bank does, but they've got their own self-governing body where it comes to payments, and it's called Payments NZ. But the owners of Payments NZ isn't the government; it's the banks themselves. You got this turkeys voting for Christmas kind of scenario. And I think to go back to your question, I think we're at a point now where there's this big dam, and the traditional players, the incumbents, are holding on for kind of dear life. But there's a crack in this dam. And by 2030, I think, particularly when it comes to digital currency and digital payments, that crack is going to release, and there's going to be a whole bunch of water that comes through, and it's going to be really hard to build that dam again. So unless the incumbents start, innovating and collaborating with local and international fintechs, I suspect their relevance where it comes to digital currency and payments is going to be diminished in the not too distant future.
Wow, I can understand that. So going back in time now, I came to New Zealand roughly around the time that the New Zealand dollar was freely floated and FPOS cards were around. And when I went back to Canada, where I was from, they didn't even have that. No one was talking about that. In New Zealand, there was this period of time, I think it was like mid 80s to maybe even early 90s, where there was just so much stuff happening in New Zealand, just taking us from a really backwards place to like front of the queue. What happened? Why did we stop moving, in your view? Like, why has there not been that rate of change and openness since then?
I think ultimately it comes down to a lack of leadership at the moment. As an example, we've got elections, not too far away. And I think the sovereignty around our digital identities, my personal identity, around my data, around the New Zealand dollar and currency system and the New Zealand domestic payment system, I think these are pretty serious, political, societal kind of issues, right? Now, can you tell me about any of the political party leaders that have talked about a strategy or investment around any of these things? So we did a lot with fiber to the home, and I think that kind of helped us during sort of COVID times. But where are the overlay services? Why are we stopping? And I think we've got to a point now where there's too much hui and not enough doi. The amount of bureaucracy and finger pointing, both within government and within the sort of more traditional larger players, particularly the listed ones, has got us to a point where we're discombobulated and we've lost that sense of urgency, that ability to make decisions, to be decisive, to take risk. But risk is okay, right? Well, like if you look at Adventure New Zealand and ACC giving everyone insurance relating to bungees and whatnot, risk isn't a bad thing, but understand what the risk is, what's the likelihood of that risk, what's the severity if it happens, what are the mitigations, and also what's the upside? What is the real risk of bringing in a digital currency into New Zealand issued by the government? I suspect it's marginal, if any. And if you go back to those FPOS days, I've been asking the regulators and anyone else actually, when we put out FPOS or internet banking or mobile banking, what, if any, policy changes were made by the RBNZ?
Probably
and
nothing.
as far as I can tell, none. So maybe the best thing they can do is get out of the way. We've lost our ability to make decisions, to move at pace, like our agility. In the old days it was IQ, your intelligence, and we got to EQ, your empathy. Now it's about AQ. The world's changed at such a rate of knots, and it's not dissimilar for companies or individuals that you need to be able to adapt and change this forever changing world. But for some reason, we've got ourselves to a point where it comes to innovation as a country, we can no longer adapt and we can no longer make these decisions. We can no longer move quickly. We try and get consensus, this ideological thing, right? I want all the banks to agree on how we can open up the banking network so that competitors, whether it's the banks themselves or fintechs or large global players, can come to this market. Now, clearly, no one's going to agree to that, right? So where's the leadership? Where's the strategy? Where's the carrot? Where's the stick? Where's the money? Golden rule. Whoever's got the gold makes the rule. We need probably somewhere between $100 and $1 billion to do this stuff. Mr. Luxon, Hipkins, where's your strategy? Where's your investment? Where's your thinking around digital identity, digital payments, digital currency, and the sovereignty of the above for individuals and entities in this country?
Well, my guess is there isn't any. So I think it goes back to what you probably said, which is like, maybe they should just get out of the way. But why would they not get out of the way? I'm guessing fear of people losing money would be one of them, but maybe it's just not very good incentive structures. Like where would be the incentive be to stand up and take leadership around something like, say, payments and actually making open banking work or anything basic like that? Like, where's the incentive to do that? Is there?
I don't know. I mean, they haven't even mandated that the banks open up this stuff, right? Like, there's no actual mandate in place. Nice conversations that have occurred. And I think whatever the risk of doing this something is, innovating, making sure that we remain relevant, the risk of doing nothing is far, far greater. Like, I don't want to see an Apple coin or a Meta coin or, the Australian dollar become the more preferred currency in New Zealand because the sovereign New Zealand dollar is no longer relevant for consumers or companies in this country.
So then what kind of strategic moves should be made then in order to, to actually make some advance? Like, what should we do? What are some of the practical steps that we as a New Zealander should do? Should we just ignore regulators, just to hell with it, forget the lawyers and just move straight on and innovate?
Look, I think a couple of things. The existing regulation is probably okay. To be honest, I think there's there's enough there that if someone was to do something that was fraudulent, the law will catch up with them, right? You can't scam people or do anything, malicious or illegal. There's some pretty good law around the Trust ID framework, around financial service providers. Obviously, if you're a deposit taker, then there's legislation around that. So I think we're okay. And I think the regulators are pretty open, transparent, and available for engagement with the broader community. So I think, if you look at individuals, and particularly individuals that I've dealt with, I found them great to deal with, right? It's that next level up that we're kind of missing. What kind of government do we want, and what kind of society do we want to live in? And, do we value innovation? Do we want to, continue to be exporters, not just of milk and, primary produce, but of technology? New Zealanders, we're very inventive, innovative peoples. We have been since, we started trading on the world stage. Exporting technology has to be the future for this country. And so how do governments enable that? How do they help us be successful? Now, whether it's through regulation, whether it's through funding, whether it's through mandates, there's a whole bunch of stuff they could do, but at least document something. What's your strategy? What's your plan? What are the SMART goals? If we were to say in 2030, if we had a clean canvas and we want to build the, digital identity, currency, payments infrastructure of the future and be world leaders again, what would that look like? Okay, so let's do that. Then what's the pathway to get us there? And New Zealand, we've got this rich history in payments and in technology and in innovation. We have some amazing individuals, some amazing entities that can really contribute to the success of these initiatives. How do we engage them? So I know a bunch of people that would love to support the government, to support fellow Kiwis, to support fellow companies. I think the culture in tech especially is phenomenal. Everyone's helping each other. There's no tall poppy syndrome. Competitors will happily collaborate with each other.
I've seen this from the outside looking in, and you're absolutely right. It's a very collaborative, open space focused on solving problems, being creative, community, working together. And there's not a lot of egos trying to be proven right. It's just people trying to get on with it. And it is actually really cool. But that everything that you're saying, like, I guess listening to that, I'm just hearing opportunity. I'm just hearing, well, hey, if no one's standing up and taking a position of leadership, well, that sounds like a great opportunity. Are you seeing a lot of personalities and persuasive people moving into this space? Like, obviously you guys are doing it. You're out there doing it. But are there people doing this, filling that void?
No, look, I think most of the companies and people that I talk to that have something innovative that has potential to be something great are going offshore from day one now. I just set up the US entity for our company last week. We're looking to the UK, we're doing Australia, Singapore, Hong Kong. New Zealand, the market's obviously quite small. And that used to be okay because, the best customer is not the one that spends the most, it's the one that teaches you the most. But it's just so hard to do stuff here now with so little reward or upside that you might as well just go straight overseas. And that's a real shame. I would love to see innovation happen here in a collaborative, ecosystem wide kind of way. Fintechs, tech fins, banks, regulators, all working together with this common vision, with this common goal, with good leadership, innovating to make society better for Kiwis, but in a way that we can export to the world so we can increase our productivity, increase the export to import kind of ratios. That's what we need to do. But New Zealand isn't attracting the best people to government leadership positions, with all respect. Like if you look at China as an example, the smartest people in universities, not the most popular, not the best debaters, not the best looking people, the smartest people, the most competent people, the most respected people for their subject matter, domain and expertise, those are the ones, the top persons from the university come to work for government. Now, our smartest people, the last place they want to go is into government.
Yeah, I know. Trust me, I've seen the politicians.
Like, what's the employee value proposition in government? Like, it's like that.
Yeah,
So,
I know some people are quite talented and capable, but there's just no incentive to do that. Why? You can do so much more outside of it. But going back to what you're saying though before, like you're kind of painting a picture that New Zealand, and I'm not saying that this is you and your view is wrong at all. It's definitely true. I'm sure, but you're painting the picture that New Zealand is kind of going backwards while everybody else is going forwards. So let's just even take Australia and UK as an example. In this sort of space, how have they moved forward? Like, what are they doing that's getting them there that we're not doing here in New Zealand?
well, investment's probably the key thing, right? So Australia, probably 10 years ago, when I used to go to Australia, I used to find my parent bank's ATM machines and get cash out because I couldn't use a card anywhere.
Okay.
Now, 97% of transactions are contactless. I heard today that 25% of digital transactions now go through the domestic switch, which is owned, by the banks and other parties, not by private companies. So in New Zealand, then they spent $1 billion on the NPP, the new generation payment platform. They spent a shitload around digital identity. They're one of the first to do CDR. ASIC has real teeth, from a regulator. ComCom, they were the first to kind of regulate the schemes. So you need kind of the Commerce Commission, you need the regulator, you need the investment, you need the culture within private enterprise. The banks over there are doing stable coins and digital currencies. They do a whole bunch of really good stuff around venturing as well. Like if you look at banks investing in fintechs over there, I don't know what the number is, but I'll suspect there's 100x the money per capita going into fintechs in Australia that was going on in New Zealand. What are the banks doing here to invest in local companies and obviously in local infrastructure, local innovation? And so they seem to have all these things sort of right. And you look at the RBA, they're doing a whole bunch of stuff around digital currency already. They seem to have all of the gears in sync with each other. First gear, second gear, third gear. The regulator, the Commerce Commission, the banks, the fintechs. Everything just seems to be in sync. We're here, we're not. Yeah, I don't think we've got a car turned on just yet. That's why it's rolling backwards down the hill.
You mentioned the Reserve Bank of Australia and digital currency, CBDC, central bank issued digital currencies. I know, I think I had Ian Wolford from the RBNZ on the podcast like 18 months ago or so, and we were talking about it way back then. And I believe the thinking was that, hey, we're all doing this because we need to protect New Zealand's monetary sovereignty. And I totally understand that, like, especially with Apple and these other massive companies, effectively, these are just other financial systems that are coming into New Zealand now that we can all just adopt and use, let alone crypto assets. So do you think that some of the innovation that we need to see, some of these blockages, like you mentioned the dam busting forth, do you think that'll start gushing forth once we move into a new CBDC regime?
CBDCs have the potential to bypass the moat that banks currently have around payments and currency. Now, it depends on how they design it and how they decide to distribute it. But currently, currency, like if you look at during COVID, support from the government was basically distributed by banks. Banks then gave that additional money that was pumped into the system, typically to people that already had money, who then bought houses or other assets. And then the divide between the have and the have-nots broadened. So actually didn't do good, particularly for a Labour Party that's more about, social equality. CBDCs don't necessarily need to be distributed via the banks. They can go via fintechs or they can go direct to consumers. And you could parachute money or value from the government direct to individuals in need. So based on your IRD, this is how much tax you paid, this is how much income you made. You're a small business owner that has a hospitality site. You could just airdrop that instantly to someone and also codify it to say you can only spend that in New Zealand within the next, whatever period of time, and only with these merchants, New World, Pack and Save if you want people to have food, or Mercury or Power, that type of thing, right? So you can enable innovation and do a whole bunch of stuff that, sort of previously wasn't possible. I'd be very surprised if the banks end up being the distributor of CBDC. So I think the government, and this is just my own thoughts, the speculation, not based on any information I should add, but I think it would be hard for the government to trust the banks to activate innovation in New Zealand where it comes to currency and payments based on the current track record. And I suspect if they made it more open, and generally the more open you make things, the more innovative, or at least the easier it is to innovate on top of those things, it becomes. And so, I think the CBDC will bypass banks if I was a betting man.
And so as it bypasses banks, that could be either a good or a bad thing. I guess we'll see. There's a whole other massive discussion we could have on that one.
But there's pros and cons, and I do like the banks, but they got to step it up. With respect to the CEOs at these banks, you got to stop operating quarter by quarter. It's not about the next quarter earnings report. Let's have a 5-year, 10-year kind of strategy and plan, and let's, I get the whole, corporate social responsibility CSR thing, right? But it's not all about carbon and recycling. What are you doing to make New Zealand a better place? What are you investing into this country? You're the largest taxpayer, but maybe spend some of those profits on investing into this country, particularly around these things that matter that you have a particular influence over: digital identity, digital currency, digital payments. Like, have you heard any of the bank CEOs talk about any of these things at all? Like, where are they?
No.
Nothing, right? Like, nothing.
But even just like partnering with startups, like I'm working on a small one at the moment, and I know you've kind of gone through it, and you've been in the space for ages, and you don't often see a bank's brand attached to that. And I don't know if that's normal overseas, whether they would. It sounds like what you were saying before with Australia, that might be a little bit more common, but is that kind of what they should be doing, is maybe partnering more with innovative startups in the fintech, tech fin space?
Oh, 100%. I think they need to make a call, right? Like, first off is, payments, something that the banks want to be involved in the future. First question, because if all you want to do is lend money for mortgages, that's fine, but just be clear on that. Do you want to lend money to businesses? I don't know any sort of startups, fintechs that actually borrow money from banks, or at least it's far and few between. And payments, how important is payments to the long-term strategy of the bank? Now, is it consumer payments, merchant payments, both? What is your strategy around that? Because if you do want to participate in that space, then let's be honest, banks and any large entity for that matter are not designed to be innovative. Trying to find someone who can say yes is probably 1,000 times more difficult. You've got to talk to 1,000 people before you can find one person who can say yes, just for starters. So if you want to innovate, you need, quick decision making, have some decisiveness. You need to be able to take risk, understand the risk, make a commercial call on to whether or not you want to move forward with that risk, right? And at the moment, I think most banks, and maybe this is some of the regulators need to look at with that $100 to save the dollar, most banks are so fearful of the risk and what the regulator is going to say that it almost blocks any decision they make around innovation in New Zealand. And so I think that's probably something on the regulator. I kind of get where the banks come from. Like, they have a whole lot sort of pushed downstream on them around, financial crime and that type of stuff, when I don't know what the actual stats are in New Zealand, but I suspect there's not that much going on in New Zealand as far as buying weapons for, North Korea, Russia, that kind of thing, right? Like, it's just not happening. I mean, the worst thing that happened in New Zealand was that up until 5 years ago, foreigners could buy property here without any sort of KYC, AML, right? That was the biggest sort of money laundering problem that we had. Yep. But not that much goes on by the banks, or maybe some marijuana. Although today, for the first time, don't know if you heard, but for the first time ever, you can now legally buy New Zealand grown marijuana for medicinal purposes from the pharmacy. That happened today.
Oh wow!
But yeah, I just don't think there's that much bad stuff happening. And so we're spending this 100x on the bad stuff. And so we've got so much focus on this 1% that we're missing on the opportunity that the 99% is presenting itself. And that's something that I think the banks and regulators need to figure out, because, the exception shouldn't be the rule.
Yeah, well said. No, that's good. Now, I want to talk to you a little bit about immersive before we finish up. And maybe to do that, if you can kind of ease us into it, just so that we can understand what maybe the long-term game plan is with immersive. Can you just maybe start by defining what Web3 is? When we hear this term that was coined by, I can't remember his name, I can't remember how many years ago, but Web3, what does that mean?
Yep. So Web3 was coined by a guy called Gavin Wood, who was one of the co-founders of the Ethereum Foundation. And I think it was roughly around 2015, something like that. And Web3 talks about this internet where individuals are in control of their digital identity, their data, and their assets, be it digital currencies or other digital assets, such as NFTs. And the technology that enables this, that people tend to get probably too focused on, in my opinion, is this decentralized tech, blockchain tech, and there's other bits that sort of form part of that. What immersive is about is bridging this Web3 world with the traditional world. And so what we've done is we've partnered with MasterCard, and we've developed a bunch of technology. And for the tech people that might be listening, APIs and smart contracts that bridge the Web3 world with the MasterCard network so that people can transact in a trustless fashion from their Web3 wallet in where MasterCard is accepted.
Could you just break that down a little bit more? So anywhere where you have a Web3 enabled wallet, like say, for example, if I have MetaMask installed on my browser, for example, is that what you're talking about? That I can actually be using MasterCard?
Yeah, correct. So for the non-crypto people on the call, in traditional worlds, you have banks that are custodians of your assets and currency. And then you go to the ATM and you get New Zealand dollars out. Now, if you get those New Zealand dollars out and something happens to the bank, such as it fails, then obviously nothing happens to the NZD under your mattress in a safe in your wallet. In the crypto world, you have exchanges that operate similar to banks, but individuals can withdraw their digital currency and assets from those exchanges and move them into a Web3 wallet, which is a digital version of your Velcro or leather wallet that you have in your back pocket. At the moment, it's really hard to spend the cash in your wallet on Amazon or Nike.com, if not impossible. And so what we enable is for your digital currency in your digital wallet to be transacted directly from that wallet with Amazon, with Nike, with Mojo, with Eden Park, anywhere MasterCard's accepted, but without the risk associated with trusting my company, Immersive, or a bank or an exchange. It's done in a decentralized way. So it's a bit like digital cash, but for lack of a better description.
Okay, so let's say I'm buying some tickets to the game. I whip out my MasterCard.
Whip out your MetaMask.
Really? Wow.
Yeah.
Okay, let's start there.
Become the master of your money with the world's first decentralized card, powered by Immersive. A new way to pay directly from your Web3 wallet, anywhere MasterCard is accepted. Start spending USDC IRL within minutes. In other words, simply connect your Web3 wallet and start transacting.
Right.
So, let's say I want to buy these kicks with crypto. All I do is go here, click, and copy. It's that simple. Be immersed in your transactions. Trace your payments from chain to merchant. And if anything doesn't add up, we've got your back. Become the master of your money with the world's first decentralized card, powered by Immersive.
Yeah, and you can spend your assets directly in your Web3 wallet anywhere MasterCard's accepted, without an exchange, without a bank, without Immersive. So fully trustless. So forget about Voyager, FTX, Celsius.
Yeah.
Instead of these on and off ramps, we've built a bridge, high-speed bridge between Web3 to MasterCard.
Right. So now really all I need is my Web3 wallet, pretty much.
Yeah.
It's everywhere I want to be.
We're a principal member of the MasterCard network, and we do issue, our own MasterCards, and we also enable others to issue their own branded cards, and we support centralized and decentralized for what it's worth. But from the consumer's perspective, it's just a really easy and elegant way to transact from their Web3 wallet in traditional Web2 worlds.
Okay. So let's say people are listening or watching and they want to get involved. Is this something that's available in the market right now?
Yeah, look, New Zealand will be the first place that we launch. As I said, most valuable customer is the one that teaches you the most, not pays you the most. So we'd love Kiwis to sign up and join and use it, and tell us what you don't like about it. Like we love compliments, but what we love more is the things that we can do better. So, let us know. I'm reasonably available publicly, and, whatever we can improve on, let me know so that we can make it better when we take it to Australia, the US, and other markets. Yeah.
Okay. So give me an example before we finish up. Let's say there is something that I'm online. Maybe I want to buy some plane tickets to Melbourne or something like that, or whatever it is.
Yeah.
How does this actually work? Just to really flesh it out.
We're working with a number of the leading Web3 wallets to integrate with our APIs so that you can do everything from within that Web3 wallet. But if your preferred Web3 wallet hasn't yet integrated, you just go to immersive.com and you can get instantaneously a one-time use credit card, and you can use that to buy tickets anywhere MasterCard's accepted.
How functional is it right now? So if I load up with a bunch of USDC, how functional is it? Like, am I gonna be able to use it in a lot of places?
Only about 70 million places around the world.
Okay, so not very many places then. Okay.
No, and anywhere MasterCard's accepted. So you can get, if you want for e-commerce, you get a virtual card, similar to what we just showed you now. And alternatively, if you want to spend it at the local coffee shop, then you can get a Google Pay, XPay card and transact directly from your Web3 wallet that way. So both options are supported.
And everywhere here just means Web3. So let's now just think about the future. So we're in this new metaverse, right? We're all plugged into the matrix. We're just drinking Slurpees, just protein shakes all the time, and we're fat sitting in a chair, watching the world go by. We'll own nothing, but we'll be happy. But how does it work with commerce? Is it going to be like there's just going to be no need for bank accounts? We just probably won't even think about that. Like, describe to me what you see, say, in 5 years' time.
So I got into payments and the internet in the 90s. And so I remember as a young person calling up websites, telling them their website. Calling up companies, telling them their website. And for every 100 calls I made, at least 90 of them told me that I don't need a website, I'm on the yellow pages. And one of those calls, someone would say yes, so that's kind of the number. And then I remember, doing a bunch of stuff in payments and e-commerce in early 2000, and people telling me it's not safe or secure, who's going to buy online? So people were against that. I set up the parking machines, the credit card parking machines. That was a cold call I made in 2003. And people told me, who's going to pay for parking using a card? There's that 50-cent surcharge. I'm like, these days, who's going to pay using cash or coins? I don't even know if the machines take them anymore. I set up Apple Computers payment system. Goodness, I think it was about 2005 we started, may have launched 06, 07. It was before the iPhone came out anyway. And we got payments working on the iPod. And then I remember people saying, who's going to use, an iPod or an iPhone to buy stuff, m-commerce, that, and, all the people at Telecom back then saying, hey, the iPhone, you can't change the battery and, the call quality is not very good. Well, who doesn't have the internet on their device now? And as clear as day, I can see that the future of commerce, retail commerce, e-commerce will be in the metaverse. Physical and digital is going to collide and overlap, and there's going to be these immersive experiences, hence the name immersive. My kids are going to go to virtual malls in their avatars, virtual concerts. They're going to be immersed in these experiences. They want to buy the, latest, whatever, music, shoes, catch up with their friends, whatever they buy in these worlds. There's a reasonable chance that a physical version will up in the post within 24 hours. The future of the commerce is going to be in the metaverse. And our long-term plan, basically, to be the PayPal of the metaverse. Web3, I think, is a foundational layer to the open metaverse. Where you own your assets, your currency, all that type of stuff. And so we're building these new rails where instead of typing in a PIN number, interacting with physical devices, that you're able to do it all in a digital way. And so that's kind of the road we're heading down. But 100% the future of commerce is in this open metaverse.
And it's just really awesome to be able to talk to you, because it's kind of like, sometimes I think about these things myself and I talk about it, obviously, and I feel like I'm going crazy myself because I feel like I can see something as well, but nobody else really shares the vision yet. But when you see little hints of it, like even just with AI, ChatGPT, that all of a sudden the light bulb starts going off for a lot of people. And I guess that's what it's going to take, right? Is that there'll just be that one killer app that people just have to use. And it just so happens to be that you kind of need to use a Web3 enabled application of some sort to do it. And so people start flocking towards that. And that's probably what's going to happen, I'm going to guess.
Do you remember the Steve Jobs ad from the 90s? It's about the crazy ones.
Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not fond of rules, and they have no respect for the status quo. You can quote them, disagree with them, glorify or vilify them. About the only thing you can't do is ignore them, because they change things. They push the human race forward. While some may see them as the crazy ones, we see genius. Because the people who are crazy enough to think they can change the world are the ones who do.
If you're crazy enough to think you can change the world, then maybe you can. Keep being crazy. Keep talking to crazy people. I think we're the ones that might actually make a difference.
Yeah, no, I agree. It's not the ones that aren't crazy. I can promise you that much. That's good.
No,
that's cool.
Not the ones in government, that's for sure.
No, that's the wrong kind of crazy. Awesome, Jerome. Really appreciate your time. Immersive, where do people go if they want to learn more about Immersive?
Immersive.com. Take out the second I. So IMMERSVE.com.
Okay, that's cool, man. All right. Well, thank you very much for your time, Jerome, and we'll catch up soon. Thanks for listening into the Everyday Investor Podcast. Like what you've heard, but you want more? Make sure that you've subscribed to our YouTube channel and subscribe to the Everyday Investor newsletter too. The links for everything are found in the show notes that you can access easily by swiping or tapping over the cover art in your podcast player. If you received value in some way, I'd love it if you could take the time to write a review wherever you listen to podcasts. Share it with a friend, or think of our show partners where appropriate. Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand. Gorilla Technology, increasing business success through innovative and strategic IT solutions. And Jerome Co. Financial advice for everyday people building everyday wealth. Remember, some investments or strategies discussed on these episodes may result in financial loss. Be sure to do your own research and ideally seek qualified advice of your own before making investment decisions. Hope you enjoyed today's episode, and we'll catch you next time around.